Good morning, welcome to the ADS Securities Markets Update. Since the beginning of the week, there were a few economic releases and events which had a slight impact on the market. However, the global equities saw notable recovery after the sharp decline on Friday, and the catalyst for such a move was an announcement by the Chinese Securities Regulatory Commission allowing the fund manager to lend shares for short sellers and for short selling, and also expanded the numbers of stocks investors can short sell. However, the entire global equities again recovered on Monday and Tuesday in addition to today. So far, the future market is still higher, and basically this was because of the People's Bank of China, who cut the reserve requirement ratio by 100 basis points toward 18.5%, and this is the biggest reserve requirement ratio rate cut since the financial crisis, which basically triggered a rally again in the global equities. The US dollar remains with a tight range since the beginning of the week amid the lack of fundamentals across the board on Monday, Tuesday, and even today, and therefore the tight range may continue. Yesterday, the ZEW data for Germany and the Eurozone came in with a mixed outcome, but however mostly positive. In Germany, the economic sentiment index unexpectedly declined back toward 53.3 in April, down from 54.8, despite the fact that the estimate, or it had been anticipated to rise toward 55.6. However, this is the first monthly decline after 5 months of consecutive gains, and the good news is that the expectations index soared to the highest level since 2011, rising toward 70.2, up from 55.1. Furthermore, in the Eurozone, the ZEW index also increased towards 64.8, up from 62.4, while it had been anticipated, or the estimates also were to rise slightly towards 63.7, and this is the 6th monthly increase in a row and the highest reading since February of last year. In addition to that, as for today, there were a few economic releases in Asia from Japan and Australia, which had also slight impacts on the market. But beginning with Japan, the trade balance posted the first surplus since February of 2011 at 3.3 billion yen in March, compared to a deficit of a minus 573.2 billion yen in February, while the estimates were to post a deficit of 409 billion yen. Furthermore, the export, or this result because of the export basically, which increased for the second or by the most in 2 months, rising by 8.5% in March compared to 2.5% in February. However, most importantly, the imports collapsed or have fallen by the most since 2009, declining by 14.5% in March compared to a 3.6% of a decline in February. And this is the third monthly decline in a row, which is basically not seen since the crisis, or since the crisis in 2009. In Australia, also the inflation figures came in slightly better than expected. The quarter, or the CPI, increased by 0.2% in Q1 compared to the same rate in Q4 of last year, while it had been anticipated to slow down further towards 0.1%. However, it remains near the lowest level since Q1 of 2012. Moreover, the year-over-year CPI also slowed down toward 1.3%, down from 1.7 during the same period, and this is the lowest reading since Q2 of 2012. However, the CPI stabilization in Q1 eases the chances for a rate cut by the RBA in the next meeting, and this is why the Aussie advanced across the board during the Asian session, rising the most against the euro, the Swiss franc, the Kiwi, and even the US dollar. But the Aussie dollar also bounced a few days ago from its 50% retracement from the second, or from the second April lows towards 17th of April's highs. However, which basically stand at 0.7687, reaching as high as 77.73 today after the inflation figures. In the meantime, the key resistance for further gain stands at 77.80, which is today's high, which represents also 61.8 from the 17th of April's highs to today's lows. Therefore, a break above that resistance is needed to clear the way for further gain towards 78.04 and 78.24. As for the European session ahead, there are only a few economic releases from the UK and Italy, in addition to Switzerland, which likely to have a slight impact on the market. But we will be waiting for the MPC meeting minutes, and the Council is expected to vote in favor to keep the current policy unchanged, including the official bank rate and the asset purchases facility. In addition to that, in Italy, the retail sales may rise by 0.1% in February, compared to another rise of 0.1% in January. And finally, the ZEW economic expectation for Switzerland will be released today at 9 GMT time, with no future estimates, while the prior reading was minus 37.9. Going forward to the US session today, we will be waiting only for another 2 economic releases across this session. which may have also a slight impact on the market unless they both came in with a more, or they both come in with a surprise. The house price index is expected to rise by 0.7% comparing to 0.3% for the month of February and January, which would be the biggest monthly increase since July of 2013. The existing home sales also may rise by 3.1% for the month of March, rising by rising by 1.2% in February, which would be also the second monthly increase in a row and the biggest monthly rise since May of last year. Oil trader also will be waiting for the U.S. crude oil inventory today, and the estimates are to rise by 2.7 million barrels last week compared to 1.3 million the week before. Oil prices yesterday tumbled after the sudden announcement by Saudi Arabia to end the military operation in Yemen. Both West Texas and Brent crude lost more than 2% following the news. But looking at the dollar CAD, or from technical side, the dollar CAD also recovered slightly yesterday, reaching as high as 1.2290. However, it is seen as a short-term corrective move, as the general view right now turned into negative after breaking below the major support, which was standing around 124. In the meanwhile, a new selling area has developed between 1.2364 and also 1.2407, where sellers are likely to appear. The euro also failed yesterday to break above its resistance level, which stands at 1.0775, leading to another decline back toward 1.0717 in Asia. However, another attempt to break above that resistance 10775 could be seen today, and the key support for today stands at 1.0706. As far as this level holds, another rally could be seen toward 1.0775 and maybe higher than that, while a breakthrough today's lows of 107.06 may clear the way for further declines ahead or below 106.60. Finally, the DAX index, or DAX30 index, bounced off on Monday and Tuesday, and also which basically stands right now around its 50% retracement from its all-time highs toward Friday's lows, at which basically stand at 12,015. However, the key resistance for today stands at 12,105 for now, which should be watched very closely. A break above that resistance is needed to clear the way for further gain, at least toward 12,191. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economical releases, reports, and analysis. Thank you for watching. I'll see you once again tomorrow.